Hi, this is Sohani and welcome back to F.Y.I. Today's video is on the types of bank accounts in India, part 1. Let's begin with some common terms used in this video. The first one is maturity date. It is the agreed upon date on which the life of a financial transaction, like an invoice or a cash receipt, or a financial instrument like a check or a stock, terminates. If you are an investor, then on this date, the principal investment is paid back to you. And if you are a borrower, then on this date, you must pay back an installment loan in full. The second term is tenure, and it refers to the length of time that will be taken by the borrower to repay the loan along with the interest. Tenure and maturity date are often used interchangeably, but they do have distinct meanings. Maturity refers to the initial length of a contract upon its inception, while tenure refers to the length of time remaining before a financial contract expires. And the last term is reimbursement, which is the act of compensating for the loss of money, or in other words, repayment. Here I have listed the different types of bank accounts. Number 1, current account. Number 2, savings account. Then you have a fixed deposit account. Number 4 is a recurring deposit account. Number 5 is a salary account. Number 6 is a demat or a dematerialized account. And lastly, we have an NRI or non-resident Indian account. I have explained the first 3 types of bank accounts in today's video, but to understand the remaining 4 types of bank accounts, please go check out part 2 of the same series. We are starting off strong with current account. The objective is to enable businessmen to conduct business transactions smoothly and to facilitate frequent transactions, for example, receiving payments, making withdrawals, and transferring funds, because the account contains liquid deposits. There is no limit on the number of transactions or on the number of deposits that one can make into this account. There is no interest earned on such deposits. This type of account is more suitable for those people who need to make and receive payments more than others, for example, business owners, traders, and entrepreneurs. Here are some facts about current accounts. Number 1, internet banking is available. Number 2, this type of bank account does not have any fixed maturity. Number 3, overdraft facility is available for current bank accounts. Overdraft facility means to withdraw more money than what is currently available in the account. Number 4, this is the best type of bank account for everyday transactions. Number 5, a minimum balance has to be maintained to be able to operate current accounts. Number 6, these accounts are not used for the purpose of savings. Number 7, these accounts hold more liquid deposits. And number 8, zero interest bearing accounts, meaning that unlike saving accounts where interest is earned, on current accounts no interest is earned. Now I'm going to talk about savings account. As the name suggests, the objective of such an account is to save money, and it can be opened by an individual or by 2 people. There is a limit on the number of transactions, but there is no limit on the number of deposits. The rate of interest earned on such deposits usually varies from 4 to 6% per annum, and this type of account is suitable for all types of depositors because banks offer a variety of savings accounts exactly curated for specific age groups like senior citizens or young adults, even for families, for institutions, etc. Here are some facts about savings accounts. There is no minimum balance that needs to be maintained for this type of an account, contrary to a current account where you have to maintain a certain minimum balance. Savings account holders can get an ATM or a debit or a RuPay card if they want to. A savings bank account is essentially a regular deposit account. It is divided into two types: basic savings bank deposit account BSBDA, and the other one is basic saving bank deposit accounts small scheme BSBDS. The benefit of opening a savings account is the rate of interest that you receive on your deposits, and banks offer a variety of savings accounts based on the type of depositor, the features of the products, age or purpose of holding the account, and so on. As a result, you have savings accounts for children, for women, for senior citizens, for families, for institutions, and the savings bank account is mostly eligible for students, pensioners, and working professionals. Last but certainly not least, fixed deposit account. So, how does it work? When you put your money in fixed deposits, you are locking that deposit for a specified period of time. Now, over specified intervals, an interest rate gets added to your principal amount, and when your FD matures, you get your amount back along with the interest that you earned along the way. The objective of an FD account is to park funds and to earn assured returns. The rate of interest earned is fixed and depends upon the amount you deposit and the time duration of the FD. The maturity period is between 7 days to 10 years, and it is suitable for all those investors who are averse to taking risks and hence prefer stable returns. Here are some facts about an FD account. The rate of interest earned on FDs will vary depending on the tenure of the FD. FD accounts generally do not support premature withdrawal facilities, but in that case, the interest earned is lowered. On the date of the maturity, the bank credits the principal and the interest to the bank account of the depositor. The FD account is another type of bank account that can be opened in any public or private sector bank. It is strictly a one time deposit and a one time takeaway account, and at the time of withdrawal, all the deposited money has to be withdrawn at once and not in installments. Interest rates are higher in a FD account than a normal savings account.